Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Head of Global Emerging Markets for Aberdeen, Devan Kaloo. Hello, Devan.
Hello.
We're here today to talk in particular about India, very popular among emerging market investors at the moment. Do you think the fact that it has become a bit of a consensus means that actually the gains have been made, or is it still quite a compelling place for gains, for returns?
I think India represents one of the best long-term stories for emerging markets for a number of reasons. From our perspective, one of the key reasons would be because some of the best-run companies in emerging markets are to be found in India. But I think what people sometimes overlook is that India is going through what should be an extended cyclical recovery. So having been the first to move into a slowdown back in 2009, 2010, it's the first to recover, and we think has probably the soundest underpinnings. Now, underpinning it is falling interest rates, falling inflation, a pickup in government expenditure, and indeed potentially a pickup in consumption as indeed private sector infrastructure. So I think there's a lot to be said for the Indian growth story. And if we're looking next 2 to 3, maybe even 5 years, I think the growth story is there for some time to come. The concern that people have with India, of course, is that expectations ran ahead of what they could deliver, as is often the way in markets. Valuations have not been cheap, and indeed some people would argue expensive. But I think those concerns are dissipated. India this year has been a laggard relative to many other emerging markets. And actually we see good prospects now, good valuations, certainly given this compelling longer-term outlook for India. So we're bulls on India, we're positive.
And looking then longer term at perhaps a 10-year view, would you say India is the most compelling of the emerging markets? I know it's a very heterogeneous group of countries, but if you had to pick one for 10-year returns, which one would it be?
I think India would certainly be one of them. When we look at the world going forward, there's lots of risks. There's a risk to global growth, there's a risk to political scenarios, there's a risk to global monetary policy, and India is probably the least impacted, or one of the least impacted countries. It is very much a more domestic story, and as a result, probably one of the safer stories within emerging markets, and indeed, actually, I suspect, globally as well. So yes, I would say if you're looking to make an investment over 10 years, you couldn't go far wrong with India.
And looking then at those risks that you mentioned, what are the ones that are causing you the most concern as an emerging market investor at the moment?
I think when we look at emerging markets over the last few years, there's been 3 big problems. The first has been people's concerns about China and whether that was about to implode or explode, depending on your viewpoint. The second is the rise of the dollar and US monetary policy. And the third is earnings. And I think the one that probably concerns us the most, or keeps us up at night, if you will, is with regard to US monetary policy, and actually more broadly global monetary policy. Because we've gone through a period since 2008 of extraordinary quantitative easing program. And there is a concern, and a growing concern, that that's coming to an end.
And looking then at global emerging markets as a whole, the sector has been very challenged in recent years. If you look prior to the global financial crisis, you were seeing returns of sort of 10% a year. Which is the reality? Is it the returns that we've seen in the last few years, which are more challenged, more volatile, or will we see a return to those 10% a year?
Well, I started investing in emerging markets in 1994, and I think I'm now onto my 10th crisis in emerging markets. So I'd steer clear of making any bold predictions of what your returns are. But the one thing I'd say, or a couple of things I'd say, is first and foremost, in a low growth, low interest rate, low inflation world, returns should be lower. So expecting the sort of returns that we've seen, post 2005 to say 2010, very unlikely. That said, I do believe that you'll get better returns out of emerging markets relative to just about everything else going forward, particularly as many of these headwinds I talked about earlier in terms of China, the US dollar and earnings are turning into more, if you like, more tailwinds. So returns going forward will be commensurate with, I think, the underlying growth. And while in absolute terms that will be lower, that will be better than most other places. So we're positive.
Devan, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.